Welcome to RTD Live Talk. I'm excited to have my guest, Mr. Lior Gantz from Wealth Research Group, joining us again to share his thoughts on the economy, markets, you name it. And so, Lior, welcome back to Rethinking the Dollar or RTD Live Talk this evening.
Thanks for having me.
Well, I'm looking forward to getting your thoughts on a variety of topics, of course. And so I know we're going to definitely cover the bond market, but I had a lot of questions already in the chat area where people want to find out your thoughts on what's happening with this new petro yuan and the energy sector or whatnot. So before we dive into that, I'll give it a couple more minutes so people can log in or whatnot. And so we're almost into April. Give me your thoughts briefly on where we're at now and where this rest of this year might be heading, in your opinion.
In terms of what?
In terms of, say, the energy sector with oil. Let's talk about oil, if you don't mind.
Sure. So the oil sector is very interesting. The first thing that's important about oil is that it's the biggest commodities market on the planet, bar none. So it affects a lot of things. The one major effect of it, Michael, is how much spendable money people in the U.S. have after they pay for their petrol. So the U.S. is the largest consumer economy ever. 72% of the GDP in America is spending, right? As you know, just talking with your friends, your family, and other people in your area, people save about 2 to 3% of their income. That's horrible, and it's very unfortunate. But that's the way that the United States free market economy works. People spend a lot. They get into debt. The federal government gets into debt. Students get into debt. Consumers get into debt. It's just a debt-based economy. And because the free market creates so much prosperity and so much equity in terms of assets and corporate value and real estate value, then the world ascribes the United States such a high regard in terms of their premium value that they allow them to spend so much, right? No other nation in the world can get into such a deficit spending economy like the US has for 20, 30 years. But if you look at their balance sheet, like if you take the total household equity of all the people in America together, it's over $100 trillion, more than the unfunded liabilities. This sort of wealth gives other nations the green light to keep this game going, because it is sort of a game where the United States cannot keep functioning as it is. In 20 years, you cannot have an economy with 40 to 50 to 60 trillion dollars worth of national debt. It just doesn't work that way. So it's got to give. But for the meantime, you're seeing changes in the U.S. And I'll get back to oil. I haven't forgotten this. Taxes have been cut in the U.S. and wages are starting to rise. I know many people are not feeling it yet, but there's a genuine rise in wages across the board, especially in middle America. So Texas, Oklahoma, Michigan, the states that had the lowest GDP growth right after the subprime crisis are now having the largest GDP growth. So all these middle states are doing much better than California, New York, and Florida right now. And that is a sign that America's businesses are actually starting to see great margins, good profits. All the companies on the S&P 500 have just revised their guidance for next year. All of it positive. Obviously, when you get such a big tax reform, all the companies just have much better earnings because you need to pay less. You get a better bottom line, and so that gave corporate America a jolt. Now, we talked about this, I think, a few times, Michael, that the United States is a very aging demographic nation.
Right.
1 million retirees today, but it's going to be about 85 million retirees. So a quarter of the country retired and out of the workforce by 2035.
Right.
So when this happens, there's a shortage of qualified workers. And if there's a shortage of qualified workers and business is booming, because America doesn't just sell products to itself, it exports lots and lots of services and products. And therefore, there's about 5.6 million openings right now in America. And employers are finding it hard to find good talent. Right. So they need to raise wages in order to find good people. Raising wages in the United States has not occurred in many decades in a meaningful way. And you're going to see this going forward. And I think coupled with the tax cuts, people have more spending power, which means that oil prices don't mean that much to them, which means they're not going to change their vacation plans. They're going to keep on commuting to work, etc. And they're going to use more oil, more gas. They're not going to save at the pump. So you're going to see people going out on their weekend things and filling up their ATVs, going on their trips, doing whatever they did when it was boom times. So the price of oil is definitely on the rise because there's going to be much more demand coming in from the U.S. Right at the U.S. coattails is Europe. Europe is starting to become healthier. ECB or not, the European economy is becoming much more robust than 4 or 5 years ago. They got past this Greek crisis. Germany is becoming a very, very solid economy. I've been to Europe this winter 3 times already, and people are out. They're spending money, they're skiing, they're doing what they want, and this is going to come in and show at the pump. So you see oil prices, they have no reason in terms of production prices head higher than $80 a barrel at the in the intermediate time. But I think from where it is today, for it to go up to 80 is not a big stretch in 2018.
Now let me ask you a question. Now how does that? Because I have a question over here. How does that tie into the petro yuan? And so now that they're got a little echo.
The price of oil and the petro yuan are not connected to each other, are not related, Michael. The fact that the Chinese have opened a futures exchange where it's petro yuan, it doesn't change the fundamentals for what it does do is just another mark in the grave that's called the US dollar currency status. So I know your show is called Rethinking the Dollar, and that's what all the nations in the world are now doing. You see, when things are just moving along at a status quo, then most people do not want to be the ones that rattle the boat. So for many decades, no one wanted to rattle the boat of the US dollar. Then, so between 1944 and 1969, no one even made a peep and said a sound in the international community when the U.S. got into costly wars in South Korea and Vietnam. Then in 1969, the French, Charles de Gaulle was president then. He said, look, there's no way that the United States can run such expensive wars and still keep this 35-to-1 ratio to gold. I want an audit. So he started pressuring for an audit in 1969, and in 1971, the United States needed to basically default on this 35-to-1, but instead of admitting that and creating a worldwide crisis, they suspended temporarily the connection between standard and gold, and obviously temporarily means many things to politicians. So what I think is happening right now is Donald Trump, for good and for bad, has opened up the negotiations table for trade agreements, for many things, and whether or not he's right or not and what he's doing, we'll know in 20 years. But what he is doing is showing the world, the United States, dirty laundry. So he's showing everything. Now open to renegotiations. And the mistake that is causing is obviously the fact that the Russian bloc, the Chinese Russian bloc, is much, much stronger in terms of what they bring to the table right now in the international community. The United States. Remember, the United States of America, with its 330 million people, it's only 5% of the world's demographics.
Right.
China, India, the BRIC countries with Brazil and Russia are much, much more significant. And the petro yuan is just their passive way of saying, why don't we start thinking in terms of what will replace the dollar? Because there is no reason, from the fact that no one wants to start dumping treasuries and flooding the United States market with excess dollars, because it's just going to create a worldwide problem.
Right.
On the flip side, there's a time and a place for a change. The UK had its reserve currency. Before that, we saw many European nations like the French, the Netherlands, Portuguese, whoever controls the seas basically, or whoever is the largest in terms of military, usually has a reserve currency role since the Industrial Revolution. So the Chinese are definitely not a country that you can discard their military. And I think that in terms of the future, in about 5 years, their GDP is going to be bigger than the United States. So the petro yuan, it's not going to have any meaningful. Don't expect the dollar to tank in an insane manner. The dollar is a very robust currency. I know it's going to antagonize a lot of people in the audience, but in terms of a currency, for a fiat currency like the US dollar, in 48 years since it's just been purely fiat, to go down about 75% in purchasing power means that on average it goes down about 1.7% a year in purchasing power. That's pretty good. In terms of a lifetime, that's horrible for you.
Yeah.
But in terms of a year basis, you don't even feel it. That's why inflation and the loss of purchasing power is such a bitch, because it creeps up on you. You start when you're 23, 24, and you're now 44, and you see you working harder to make the same payments that you did, because now you have 2 kids, 3 kids, etc. You're trying to move up in the world, and it's just eroding and eroding and eroding. So that is one element of why I think people need financial education early on in their lives. And I've been lucky. What happened to me is my father went bankrupt when I was 13. I was forced to think about money. And I was forced to start working. So at age 13, I started painting decks and delivering groceries. And then I got on the scooter and delivered pizzas and assistant coach of basketball and then a clothing shop. By age 16, I saved up like 20 grand. And I started reading financial books, like what to do with my money, because I didn't want to spend it, right? I earned it. It's not like other people, other children, usually they get an allowance, they go and spend it on candy or whatever, clothing, right?
Right.
Parties, etc. It doesn't matter. Kids don't have that mentality of opening a bank account. I actually had a bank account, and I signed a waiver. My parents had to sign a waiver at 16, allowing me to start trading stocks. So, that bankruptcy basically put me in a tough position. Yeah.
But it served you well. On the flip side.
Exactly. On the flip side, it served me well. My father went bankrupt 3 times. So every time I learned something different. And
so watch this. So let's shift gears a little bit, because there's so much tension here in the U.S. now because of this tariff talk. And so why, in your opinion, why now? Why this whole tariff? The fact that China is considered currency manipulators. They're no longer able to run such a large surplus here in the U.S. But that's just been this way. That's how this fiat system and our monetary system has operated for so long, because we give them our debt, they give us goods. So why is Trump trying to shake that up right now, in your opinion?
Well, I think it's a great question. But if you try to go inside of the administration's head, they're trying to shake things up. That's what they want trying to do. They want to renegotiate trade agreements. And I think what Trump is seeing is that he can win easily. He can every time he signs a new agreement to the people in the United States, it's a better agreement than what they had, because he was able to project during his campaign and during his time in office that the U.S. is a sucker. And people think that. People think, hey, we're losing on every trade that we have. We're losing our jobs. We're losing to globalism, etc. So what he wants to do is show that he can win. How do you show that you can win? You create a situation where other people are scared that you're going to do a trade war. Now, neither the U.S. nor China want a trade war. They're far too smart to do that. It's not to the benefit of everyone. But if you come to the negotiations table and strike a new deal, that's a win. That's a big win. The markets will rally. That will create confidence. People will say, okay, that's a great new environment. They will spend. The economy will go forward. CEOs will hire. Machinery will be invested in. So, in other words, have you heard of problem, reaction, solution?
Mm-hmm. Yes.
So Trump is creating a problem so that other people will say, hey, I need to react here. And then he will bring to the table the solution that he wanted in advance to bring to the table. But the Chinese were doing just fine. They didn't want to renegotiate trades.
Right.
They're enjoying what's going on. They love their middle class is growing by the second. From 1978, one of my mentors was in China in 1988. I was 4 years old, but he's 65 now. He owns 3 malls and 5 parking lots in China. China has the largest parking problem in the world. So yeah, it's true. And by the way, they have many other problems. For example, the difference between their male and female population is so large. People are permanently available there. If you're looking for a husband, there's like millions of people that cannot get married. Like demographically, it's not possible. So, Michael, I think in 1988, he said to me, "This country is 10 years into its stride." When he was there, he said 1988 was 10 years into it, because communism stopped in 1978. They were the poorest country on the planet. By 1988, they started to show blooms and started to blossom. And in 2000, when I started trading, right after the dot-com bubble, I purchased my first mutual fund, and it was China tracking fund. And the reason was it was such an under the radar investment opportunity. Nobody thought about China. People started talking about China in 2008 and 2007, 2008 as an important part of the global economy. So to kind of wrap up your question, I think the tariffs are tactic. The putting tariff on aluminum and iron wouldn't change, and the big picture wouldn't change a lot. Some employers in the U.S. will have to fire people. It will create some problems. It's true. Yeah. It's not. It doesn't have any effect. But Trump has got to make sacrifices, Michael, like we all do. Mm-hmm. He's got. And I'm not in America. I didn't vote for Trump or anything. I'm just getting into his head and trying to project what I think he's going through. And he inherited a mess, and he want to take the country in a different direction. And one of the ways to do it is to shake the boat. That's his style. That is why people elected him, anyways. So
right now, here's one of my issues with that idea of shaking things up. Is because he's in a sense biting the hands that has funded us for so long, and we're not in a position, infrastructure-wise, to actually take on the role of producing for ourselves, because all of our manufacturing base is pretty much null and void. And so to go back to the negotiating table to try to balance things out will be very disruptive, which can be disastrous as far as there not being a win-win for anyone, because their economy will slow down because we consume everything. We don't produce anything. So if nothing comes over here, I mean, Walmart will be empty for us. So, it's just unfortunate. I think he's going to piss the wrong people off, which is it's gonna get uglier. But I understand what he's doing, trying to shake things up, but yet we're already on tough grounds with a lot of countries right now, I think, in my opinion. So, but if you got a thought, share on that, but we can move on if you want to.
Well, just remember, Michael, the politicians are not. They know that he's playing a game, so they're playing a game, and there's a lot of under the table talks as well. So whatever comes out to the media is already scripted, and it's very much not the major news. Like, we hear the news days and days after real deals strike.
Right.
You got to remember, if a president goes to the negotiating table, the deal is done. He's there just to sign it and ink it and pose for the cameras. All the deals are done in advance. There's no room for talks to be done live when all the world is watching and anticipation of what this will lead to. So, in other words, if he wants to get a deal done, the deal's already done before they actually invite the media and do a conference. If he doesn't want to do it, he'll get to the conference with the agenda of not signing anything, with creating an even bigger problem. That's how politicians act, and it's important to understand that it's politics is a game. It's the oldest profession on the planet. And it was invented at the same time as prostitution. It's not a joke. They go together for thousands of years.
Yeah. All right. So watch this. So before we dive any further to conversation, as always, we have a couple people watching us. So if anyone has a question that they want to ask directly, feel free to call in. The number's above my head to ask Lior Gantz a question directly. And so other than that, there's some couple questions here I want to get to, if you don't mind, and then we can get into some more things. And so one of the people asked here, he says, if the U.S. economy is doing so good, then why are so many retail stores closing, or so many stores closing? And so I just read something a minute ago about Toys R Us closing and all the malls, because people aren't spending retail, people aren't spending as much money, even though, as you mentioned earlier, there's some money there. Wages are going up a little bit, but middle class, lower class, I don't think is as plentiful as everyone else. What are your thoughts about that?
Well, obviously, if one sector of the economy is not doing well, it doesn't mean that the economy is not doing well.
Right.
The retail sector is doing horrible. It's just obsolete. It's as saying, hey, people don't even read newspaper anymore. Don't they have like $2-3 to spend on newspapers? No, but they get their information elsewhere. Remember what's the biggest company in the world? It's Amazon. It's a retailer. It's not a traditional retailer. The first company I ever owned, Michael, and I still own it until today, it's called VF Corp. Nobody has heard about VF Corp, but let me tell you what it owns. Wrangler, Lee, Timberland, John Sport, Kipling. It owns North Face. All these companies are under one umbrella. It's VF Corp. And that retailer is doing just fine. It's trading at a 52-week high. There's definitely a problem in the United States in terms of mall space. Yeah, sure, but it doesn't mean people are not spending. People are spending their hearts out. The consumer debt is at an all-time high.
Yeah.
But they're not going to malls. The consumer habits are changing.
Yeah.
So 100 years ago, we had an elevator boy in every elevator. It was an actual person in an elevator.
Right.
It doesn't have.
Right.
Things go obsolete and they move on.
Yeah.
We had film and cameras not too long ago, right? You talked on landlines. This call wasn't possible. So the world is just transitioning. And it's important to understand that. And to the comment of the person who said that, I understand exactly what he's talking about. And what he's talking about is the wealth gap in America. So the fact that the United States economy is doing well doesn't mean that people are doing well. It means that the economy is doing well, meaning corporations are doing well, meaning that CEOs are living the good life, but it doesn't say anything about the middle class and the lower income people. The fact that jobs doesn't mean that they can live a good life. So having 3 or 4 part-time jobs is not the right lifestyle. So, I completely understand what he's saying. The United States economy is doing fantastic, but people are not doing well. And that is a situation that can coexist.
Yeah. Interesting. Very, very true. So that's a good way of explaining that. Let's talk about debt. So we had a spending bill that went down to the wire, 1.3 trillion just to get through about 5 more months. So, I mean, I assume, like you mentioned earlier, this, can't go on forever. But yet, with all the shakeup that's happening with, us, with Trump trying to renegotiate things like that, what do you see this whole debt situation going? Do you think it can go on for a couple more years or what before some change needs to take place?
Well, cutting taxes is a large risk for an economy that has about $2 trillion in Social Security and Medicare, Medicaid expenses. And about $700 billion worth of defense spending a year, and just interest payments at the range of about $800 billion a year. When you have an economy like that and you try to cut taxes, you really hope that the people that have this disposable income will make sure, or companies will make sure to reinvest that into the companies and grow the company, grow the economy, bring in more work, and hire more people. Because if you don't, you're shrinking the federal revenue from taxes, while your expenses are not going down. There is no reason for Social Security or Medicare or Medicaid to go down in terms of how much the United States government will spend. What I think states will start doing in order to offset the lower taxes is they'll force people, if they want to get their Social Security or their Medicare or Medicaid, they'll need to continue working. So show us a pay stub to your local government in order to apply for the entitlements. So nobody said, hey, these entitlements are for everyone, and they can keep changing the laws. In fact, if you ever read the Social Security law, you're going to realize that it's nothing but a promise. They can absolutely kill that program with a flick of a button. Obviously, that's going to create problems in terms of politics that no one wants to face. But the Social Security law is ridiculously written in terms of how it protects the people that are the recipients. So in an environment where you raise rates, which means that the United States government will need to pay more in interest payments, and you lower taxes, you're taking a big, big risk. Trump is taking that risk because he thinks that the economy will be able to endure that risk, and he'll be able to perhaps cut on many programs and create an infrastructure program that will jolt the economy even further. The United States actually needs infrastructure. If you ever drove on the roads, the bridges, just the sewer systems, it all needs a big upgrade, and that is money that will go to Main Street, not to Wall Street. So it will go to constructors and to people in construction. Construction is the #1 most important industry in the United States of America since 1776. And the way that the United States has been able to grow so big is because their demographics have continued to grow, and more cities have been built, more and more roads, interconnecting trains, etc. So the United States currently have about 330 million. They're going to be about 400 million by 2050. And so there is no reason for why the economy will stop booming. It's just that the government has to think about what it's doing, because it can absolutely crater the measuring stick. So if your house is worth $100,000 in today's dollars, and tomorrow the United States dollar goes to zero, it doesn't mean that you can sell your house for zero in terms of purchasing power. It just means it's worth $0.
Yeah.
But is going to be worth something, right? A house is valued through the eyes of either an investor or a first-time home buyer. If your house is a first-time home buyer environment, then it has a market, it has demand. If it's a house that has the potential to be rented and generate cash flow, then it has a yield that is expected and estimated, and investors will bid up the price of the house. The measuring stick is the US dollar. The only way you can really get screwed by runaway inflation is if you save your money in dollars, not if you price your items in dollars. Nothing will happen to the items themselves. It's not like the Trump Tower in New York City will be worth $0 tomorrow if we stop using the dollar. It will be worth millions and millions and hundreds of millions in other currency or in other form of payment. So just important to understand, the only way you can really lose big time from inflation is if you actually have dollars in your bank account to the tune of 5 years worth of spending power.
Right.
That's just not the way I structure my portfolio. If you want to access my portfolio, at least my allocation model, go to wealthresearchgroup.com/portfolio, and you can download the way I structure my finances in 2018, and that might help the listeners. If you go to wealthresearchgroup.com/crash, Michael, then you can see how I'm looking to anticipate the crash, prepare for it, and then thrive in the aftermath, because obviously the stock market is closer to peaking than to anything else. So
right.
I think that's very important.
Okay, so I'll list both of those down below in the description. And so let's talk about the crash. I'm glad you mentioned that word because that was one of the questions. Now, with everything that's happening, debt reaching peaks, stock market, as you mentioned, kind of reaching a peak, but yet who knows how high it can really go. And so, but there's so much volatility, so much swings up and down, and where so many people, even the mainstream media, is really focusing on these swings of several hundred points in a day, then it bounced back, and all that stuff happening now. So this crash you're referring to, is this the announcement of a recession that then spirals out of control into some type of what? What does that mean to you, crash-wise? How do you get to that point?
Usually, the stock market peaks before the economy hits recession. So for the stock market to peak, what needs to happen is there needs to be a better alternative for many investors who are now buying stocks. So the environment needs to change. Right now, as I said, the major indices, such as the NASDAQ, the Dow, and the S&P 500 are priced at 2015 prices. So I can definitely see all of these rallying about 50% higher. I can see the Dow hitting 36,000 points. I can see the NASDAQ going and hitting 10,000 points. So the stock market has a lot more room to grow in terms of how it's priced. Why? It's because there is no other alternative to deflationary assets such as high growth stocks. If you look at the alternatives, if you try to generate income through the bonds market, then your fixed income right now in the 10-year bond, it's yielding about 285. And if inflation is about 1.9, then you're generating 0.9% in real terms. And that's just horrible. Yeah. Now, if you buy a stock, at least you have the upside of growth. So if the dividend yield is lower than 2.85, which many companies yield less than 2.85, then you're still generating 0.9 in real terms. But if the stock price goes up 20%, like in 2017, then why own a bond, right? And so people, for them to own a bond, yields need to rise. But then you got to think about, hey, if yields are rising, it's because inflation is rising. So my coupon payments, my interest payments will still erode with inflation. So the incentive to own bonds is minuscule right now on the individual level. Governments, sure, they come and they bid the auctions. It's part of their reserves. They got to have treasuries in their reserves. But for funds, etc., they are going with stocks right now. The one thing that will change this is when the Fed funds rate, so the short-term overnight rate, banks are lending to, when this artificial lending interest rate is higher than the 2-year and the 5-year bond, when you can overnight make more money than the United States government offers you in 2 to 5 years, that usually creates a situation where the economy is slowing down, stocks greater, and then about a year later, you go into full recession. Now, if you think about the Fed's fund rate right now, it will take about 6 rate hikes for this to occur. So the stock market has like 18 months before the real shit comes. So in terms of being an investor, you got to be a contrarian. There's no euphoria right now in the stock market, and there's a number of opportunities that are very solid. And then on the flip side, if you're really a sophisticated investor, when the stock market finally tops, usually when the S&P 500 tops, the mining sector bottoms. It's the best time to own mining stocks. So historically, in 2000, when the NASDAQ tanked and the S&P topped, that was the best time in this generation to buy mining stocks or gold overall. So there's definitely ways to thrive inside of a bear market for general equities and not be in a situation where, hey, I'm going to retire. I can't believe my S&P 500 portfolio is now down 30%. I need to start thinking about my retirement in a different way. No, you can hedge yourself with other forms of assets that are much more alternative. You can, if you go to wealthresearchgroup.com/gold playbook, it's the lengthiest manual I've ever written about gold stocks, the entire market for gold, and how to avoid traps and how to make sure that you know what you're doing, because it's a very risky sector. Yeah. If you know what you're doing, you can really change your life. It's true. It can really change your financial ability. If a stock that you own can go up 10 to 15 times, that's insane.
Right. Now, someone here in the question section mentioned about real estate and investing in rental properties and whatnot. What are your thoughts on rental properties as, you know, cash flowing for income's sake and stuff like that during a crash or during a recession, or how would that play out? What are your thoughts on that?
Yeah. Well, interestingly enough, when the subprime mortgage crisis happened in September of 2008, I think the person who was asking the question will get a kick out of this. I was rafting in Colorado for 4 days. No cell reception, no signal, no nothing. So I end the trip, and my inbox and my text messages are, there was 150 something messages there. What's going on? Where are you? And the reason is that the stock market collapsed right in those 4 days when I was rafting through a river with no reception, no nothing. And that taught me 2 things. One, being away from the panic is absolutely an asset. The fact is, I wasn't forced to sell all my stocks, and I just held on to that portfolio and started buying stocks. Immediately after, in 2008, I flew to Phoenix, Arizona, and started buying properties. I looked for properties that are priced less than construction. What do you want to call it? The price of rebuilding them. So, in other words, when constructors told me, if you bulldoze this house and rebuild it, you're buying it at less of a cost than that, I paid cash, and I started accumulating real estate for rental purposes in Phoenix. And then I started a real estate niche that was very, very profitable between 2009 and 2013, and it grew to 5 metropolitan areas, that business, and I sold it in 2013 because the glut of foreclosures that fueled this business model was just going away. So the United States right now is in a different real estate market. when rates rise, to the question to answer the question, when rates rise, usually people take out mortgages. It's counterproductive and it's counterintuitive, but what people think is my mortgage broker just called me and offered me a 5% loan. And he told me that if I don't take it in 1 year, it will be a 6% loan. So when interest rates rise, people are in a rush to get into home ownership. Home ownership in America had bottomed in 2015 and it's on the rise. People are just starting to move out of rental properties and into homes. The problem, Michael, is that people have steady incomes. They have the cash for the down payment, but banks aren't pre-qualifying many people. Either they have bad credit scores from the days of the crash, or they didn't start the process of building a credit score now. So what I'm personally doing is I'm working on a niche called lease options. I'll be glad to explain what it is, because you can generate in probably 2 to 3 hours a day is what you need to devote to this. So very part-time. You can keep your main job, your main career. You can create a deal to 2 deals a month. Use this, and every deal is about 10K. So there is a great opportunity all across America with lease option. I don't mind explaining that at all. And I wrote a full report on this strategy. If you go to wealthresearchgroup.com/niche, NICHE. Let me explain what it is, though, just briefly. So in terms of sellers, there are many people who bought their houses in the last 3-4 years, and their houses are priced close to what they owe in terms of mortgage. So let's say the house is worth $100,000, retail price. They owe about $93,000 on their mortgage. They cannot take a discount if they want to sell that house. People sell the house for all kinds of reasons. In the 4 years that I was full-time real estate, I saw people selling a house because that's the house that they were divorced in. So they don't live in it anymore. They inherited a house which is half a country away. They relocate. A bad tenant left a mess and they never got around to it, and now there's bushes growing all around that property. It's vacant and squanders have gotten in. So there's plenty of reasons why people want to sell just homes, their homes. But any realtor will tell you, if your house is 3 to 4 to 5 years old and needs a little bit of work, you can't price it at top dollar. And so this guy who has a large monthly payment every month, he can't sell his house for $100,000 and he owes 93. He's out of options. So the monthly payment is burning a hole in his pocket. He needs a solution. On the flip side, many buyers or prospective buyers want to move out of rental neighborhoods and into the better school districts. They want the home ownership. They don't want to blow money away on rent, and they finally want to settle down and build a life, right, and build a family. But they go to the bank and they can't pre-qualify. You can come in there and create a solution that is a win-win for both of them. And the way you do it is you create a lease option agreement between these two parties. So how does that work? You come in there. This is just a case study, a blank example, but this is something that I actually do on a monthly basis. So let's take the example of this guy who owes $93,000. All he wants is $93,000. Or he wants someone to relieve him of this headache called a monthly payment. So let's say he pays $1,000 a month in mortgage payment right now. If those buyers come in and pay a rent of $1,000, that covers his expenses. Now this house is no longer an issue for him. This couple will come in and put a non-refundable down payment on the house, move into the house, and become what we call tenant buyers. They don't have any equity rights to the house. The title is still owned by that same person, but he's able to pay his monthly rent, his monthly mortgage, using the monthly payment that they are supplying him with. Monthly payment is reducing the balance that they owe him, because they owe him $93,000 for that house. In 2 to 5 years, they'll be able to walk into a bank, show them this transaction, and the bank will gladly loan them the money to finish off the loan. Why? Because right now that house is worth $93,000. They only owe about $40,000 on it, and they want $40,000. So why would a bank with a guarantee of $93,000 not loan a couple $40,000 when they see that this couple hasn't missed a payment? Right. That's the beauty of this, and you can come in and make money on the front, in the middle, and in the end. On the front, when they pay him the down payment, you can ask them for more. In other words, if the sales price, if he wants $93,000 and they just want home ownership, they'll be willing to pay $100,000. You'll give him 93 and keep 7. Then every month, instead of paying him $1,000, that's what he wants. Have the buyers pay $1,050. So now you're creating cash flow for yourself of $50 a month. And in the end, when they come and finish the transaction with a balloon payment, we call it a balloon payment because it's a one sum that you need to pay them, and they owe about 40. Then you create a situation where you get your commission off of the actual buyer. You say, hey, let's put it in contract that when they finalize this, you give me $2,000 for putting this deal together. So this deal is worth 7 on the front, 2 on the end, so $9,000, and all the way through $50 a month, which obviously in a 4-year timeline, it becomes around $2,000. So that's an $11,000 deal on a $100,000 house, and you never touched it. None of your money was at risk. You put literally a few hours putting this together, and you can do this over and over again. I love it, and it's a pretty phenomenal opportunity because there are millions of people right now begging for a solution like that don't even know this exists.
Wow. I mean, I've never heard of that option, but it definitely sounds interesting to me. So I will be finding out more for myself. So let's move on a little bit, because a lot of times we're talking about, solutions to the problem.
Or anything like that. You don't need to be a broker or an agent or anything like that.
Mm-hmm. Really? Okay. Well, hey, I'm going to check into it for sure. So I will be going to researchwealthgroup.com/niche. Am I correct? For that one.
Wealthresearchgroup.com/niche. Yeah, that's correct.
Yeah, I got you. I'm on that one. So let's talk a little bit about the crypto sector. And so we know a crash is coming. Now let's talk about some of the ways that people will begin to, absorb some of that liquidity that will be pumped into the market as another monetary tool. And give us some of your thoughts on the crypto space in the next couple of years during this crash aspect. Will them boys be inflated in nominal value and measured in dollar terms, or what? What are your thoughts on that?
I think the cryptocurrency market has completely changed in the last month. Mm-hmm. People are hard. The people that are buying Bitcoin now is back to the hardcore people. Mm-hmm. People who just wanted to, hey, I got to open an exchange account today. I got to buy Bitcoin today. They're out of there. They do not. They did not have the knowledge level or the resolve to be a part of a bear market. It's like when I started trading, then day trading was very popular. Mm-hmm. And I remember that I couldn't understand the people that day traded, because day trading works only in a bull market. Mm-hmm. So why would you buy a stock for 20, sell it for 21, then buy it again for 25, sell it for 26, buy it again at 30, sell it for 31, and if you can just own it at 20 and sell it at 30.
Yeah.
So it just made no sense to me, and that is what I thought people were doing with Bitcoin. They were trying to buy it at 10, sell it at 11, buy it at 12, sell it at 13. It works until you're the one that buys it at 19 and sells it at 8. So Bitcoin is a technology in evolution. It's an evolving technology. If you buy a piece of Bitcoin, one Bitcoin or a fraction of it, you now are partial owner of this technology. If you believe in the technology, then you got to realize that people are working on scaling this technology. Right now, the Lightning Network, for example, might create a situation where it's indefinitely scalable. So it's going to literally have the power to become a global currency for the first time. Other currencies will follow, and what you got to realize is, because it's so open source, it's so decentralized, it's going to create a situation where banks, as mediums of exchange. So if you want to wire money, you're going to pretty much prefer to do it on a cryptocurrency platform than a bank. Why wait 3 to 5 business days to send money? How retarded is that? I send money from my Zurich account to my Vancouver account, and I FedExed a document on that same night from Zurich to Vancouver. My document reached Vancouver first. It's absolutely ridiculous that you can send an email instantly and you have to wait for your banker to show up in the morning in order to send money. And so that is one of the only industries that it hasn't evolved in like 30 to 40 years. And in terms of medium of exchange, it's obsolete. In terms of payment systems, the minute that cryptocurrencies are able to become more favorable than Visa and MasterCard, forget about it. It's the same thing. All of these companies are facing huge challenges, huge. The only way that they can thrive through this, and this is what I would do if I was a CEO, I would acquire companies in the crypto markets, and I would hire people in the blockchain space to make sure that I don't become one of these retailers like Toys R Us or whatever that are being Amazoned and are shoved out of the market and becoming non-relevant. So I just love this. The fact that people are able to send money instantly around the world, beautiful. Obviously, if you live in the United States and you need to send money to Japan, you can't expect the crypto market to be unregulated at all. It's just, be realistic. You live inside of a democracy. There's rules, the regulations, there are laws, anti-money laundering laws, you name it. Cryptocurrencies are gonna become much more regulated, and they're gonna be like any other financial asset. It will really interest me to see whether or not they're termed as a security, commodity, or something else. And overall, in terms of the future, it's not even a question whether or not they're important. Do not compare them to gold, or do not compare them to a safe haven from a currency crisis, because they're not. They're certainly not what you need to do in terms of if inflation happens. They're outside the system. That's their main advantage. So if you own fiat currencies and you move it into cryptocurrencies, you're out of that. You're out of the risk of the dollar system. But remember, when you want to move your crypto back, the exchanges, they want you to take dollars. So you gotta really think about what you're doing. But again, for me, cryptocurrencies is a speculation on technology. I am very much focused on which projects can become breakthrough projects in terms of technology, and that's where I will place my money. In 2017, Wealth Research Group alerted our subscribers on Dash at $30. It went over 1,000. Ethereum at 12, went over 1,000. Bitcoin at 400, almost touched 20,000. Litecoin at 20, Ripple at 27 cents. It traded over $300. And so over $3.
Yeah.
Yeah, $3. Like a month later, I was getting confused because it went up 1,000%. Yeah. So look, the opportunity is definitely there. Now it's the time to wait and see, because with cryptocurrencies, what you are able to tell right away is once they start trending up, don't try to call the bottom on this. Just wait it out, wait for the sector to start booming again, and then get in there. And what I think, Michael, is the major event, the black swan, right? But it's a black swan because it's more like a first plane ticket, a first class ticket event where somebody surprises you with a good thing, not a bad thing.
Yeah.
Central banks, when the first central bank will announce that it started buying cryptocurrencies as part of its reserves, that's going to change the market overnight. The other major event is when any project, any group of smart developers are able to connect the blockchains. In other words, if you have data on the blockchain of Bitcoin and I have data on the blockchain of Ethereum, and they can talk, when this happens, this will bring mainstream back, because this will actually revolutionize cryptocurrencies. All these projects can talk, And so it doesn't matter if there's 1,500 or 20,000, they can talk to each other like billions of computers talk to each other. It's not, we don't say, hey, there's too many computers in the world, right?
Right.
We never say something as ridiculous as, hey, everyone has a computer. Why do we need so many computers? And it's the same thing with cryptocurrencies. There are going to be thousands and thousands of them, but as long as they can talk with each other, then it's going to be seamless. Or in other words, it's not going to be creating friction.
Right. Well, fair enough. Now, as we draw towards the end of our conversation tonight, looking ahead for the rest of this year, give me one thing that excites you about opportunity for growth, profit, earnings, and whatnot, and then one thing that really has you concerned and where you're keeping an eye on it probably more than anything else.
I'm going to surprise you and tell you that excitement is overvalued.
Mm-hmm.
Try not to be excited when you research stocks. Mm-hmm. Most of my portfolio, 70% of my portfolio, is the most boring companies in the world. Mm-hmm. It's property and casualty stocks. Mm-hmm. These are companies that all they do all day long is create insurance policies and underwrite them, and then if they're good and if they're priced right, what they do is invest the float. If I can explain that for a second, I think that's the most valuable part of this interview.
Yeah, go ahead.
So, an insurance company, what it does, if it's well run, because if I open an insurance company, you open an insurance company, there's really no difference between us. We both sell policies. Mm-hmm. So the difference between them is what we call managerial. It's the difference between management teams. Mm-hmm. The best management teams don't write a lot of policies. It's the same as great investors, they're picky with their stocks. Mm-hmm. So they're picky with their policies. What they want to do is they want to earn an underwriting profit. In other words, they want to make a profit just by underwriting the policy. Mm-hmm. And that's called the ratio. Now, you want to look for companies that have a ratio below 1. As much as possible, because those companies are making money just by writing a policy. Mm. So, and that's rare. Many companies do not make money on the policy. Why would an insurance company write a policy where they don't make money on the underwriting? Well, it's because when you pay me, Michael, an insurance premium, will that premium ever come back to you? The insurance industry is built on the fact that actuarially or statistically it won't.
Right.
Now, that money that you give me is called a float. It's not my money because it might be that I need to give it back to you. Mm-hmm. But in the meantime, I get to keep it and I get to invest it for my own purposes. So you give me money mm-hmm. and I get to invest it tax-free for me. Means that a company that is able to underwrite policy profitably is actually getting paid to invest your money. Mm. For their own sakes.
Yeah.
That is what Warren Buffett was able to do. He now has $70 billion in float. That insurance policy, that premium, mm-hmm. for all of the insurance companies that he owns, he now plays around with $70 billion of other people's money that he might be needing to pay back if an insurance claim is actually exercised, but in the meantime, it's always growing. So $70 billion of free money. If you put that in a 10-year bond, you're making 0.9% of very risk-free money on $70 billion. If you know what you're doing, like Warren Buffett, you can actually compound that at exceptional rates. So that's why he was able to become the richest investor ever. Mm-hmm. What I'm doing right now in the next 3 weeks is creating a special report on exactly what these property and casualty insurance companies, which are the best ones, and in the newsletter. If you're a reader of the newsletter, you're going to see a full-blown special report on this on April 20th of this year. Mm-hmm. So we're just finalizing this. This is what excites me. Mm-hmm. It doesn't excite anyone else, though. So when I see a great insurance company that is absolutely priced like, who buys insurance companies, right? And nobody thinks about this. And so that's why they're always priced in a good way, because nobody wants them. Nobody wants to buy them. People are always after this FDA approval stock. Will this company be able to solve cancer? And I have just determined that this doesn't excite me. So what I think is important to understand is, get excited about the most boring stocks in the world. Now, if you're looking for real excitement, what we call the exotic stocks or the play money, remember, only trade with play money, with stuff that you're doing it for a big bet that can go sour. For me, because I write cover calls, I sell cover calls, and I sell puts on the options market, and I generate cash flow from that, from the premium, being basically an insurance company for traders. I use that money because I generate that from the market. I use that money to funnel my speculative portfolio. So I don't tap into my own savings to do that. I tap into profits. I take profits from one thing and I say, okay, I'm willing to bet these profits on risky plays. Some of the risky plays that I'm involved with are companies in the mining sector. Some are in the cannabis sector, and that's usually my method of operation. I dollar cost average Keith Neumeyer's companies. So in other words, First Majestic Silver, First Mining Gold, and companies that he's a big shareholder of, like Zinc One and Silver One. I accumulate major positions over a year or two, once they're, as they keep going down, because there's no interest in mining stocks right now. And on the flip side, I short the gold ETF, because the gold miners ETF, because as a sector, it's a very bad sector right now. So make money on your short trade, and then you accumulate a big position in the best names. And for me, Keith Neumeyer is number one in terms of his ability to manage companies, run companies. You can see that in 2016, where First Majestic Silver went from $3 to $23 in 8 months of rally. So just imagine what it can do in a real bull market. First Mining Gold was a company that he founded by buying up pennies on the dollar assets. Michael, he was able to buy gold in the ground for $8 an ounce. Right? Companies are paying about $70 an ounce for gold in the ground. So he was to buy it at 1/10 of the average price of what companies can do right now. Nobody can do that again, because he did that at the worst of the worst in terms of sentiment. It was in early 2015 when nobody wanted to touch gold. It was cratering and around 1,050 in terms of spot price. So these are the type of companies that I'm involved with in the mining sector. Gold Mining Inc., for example, is a company that was in the top 10 best performing stocks on the TSX Venture in 2016. And it's because it has a shareholder base that includes Doug Casey, Rick Rule, and Mary Katusa, arguably the 3 best stock pickers in the mining sector. And it's run by one of the best people in the industry, Amir Adnani, who also runs UEC, Uranium Energy Corp, probably one of the only US-based producers of uranium in the world. So these are top people. They can't change the sentiment of the market. They can't change when the market will start to go up. But you would be very naive to believe that these kinds of companies that have quality assets that were originated in the worst times in terms of sentiments, so therefore they got best bargains on their assets, you'd be naive to believe that they will stay cheap forever. Yeah. So that's where I'm proud of taking risks, because I'm taking them when nobody else wants to take them.
Sure. That makes sense, man. That makes sense. Now, the last thing you talked about, what excites you, what got you fired up, what concerns you now? What do you keep your eye on in regards to something that could be that black swan, as you hinted at earlier, that could cause that crash that you also referred to?
The bonds market. The bonds market is horrible in terms of its potential to implode. It's the most frightening and concerning thing that that I keep an eye on. In fact, the latest special report that I published on wealthresearchgroup.com/bonds is all about the fact that the equity loss that can be incurred in the bonds market can be north of what happened to homeowners in 2008. We could see a $9 trillion equity loss if the bond market craters. And why do I say that? Very briefly, because I know that this interview is very lengthy and probably the attention span is kind of.
I think we had a couple more people join us, so I think more people are chiming in. So I'm definitely learning a lot. So keep going.
Yeah, no problem. I know that it's very hard to retain information just verbally. That's why I create the special report, so you can have another source of information to kind of get a recap of what we're talking about. Michael, if you buy a 10-year treasury bond, if you own the U.S. government money, let's say you buy a face value bond of $100,000. Today, you're going to get 2.85 on your bond. It means that in 1 year, your coupon payments or your interest payments are going to be $2,850. Imagine if the Fed keeps raising rates and the 10-year bond now yields 4.5%, which is perfectly normal because normalized, the 10-year bond usually pays 6%. Let's say it pays 4.5%. If you're new to the bonds market and you can either buy my bond, which is $100,000 face value, and you'll get 2.85 on this bond, or you can go to the new market, to the new issuance of bonds, and get 4.5% for that same $100,000. You get 4,500 instead of 2,850. Which bond would you buy? You would obviously buy the one that yields 4.5%. If you're going to put $100,000 into bonds, 10-year bonds, this one yields 2.85. Another one year later yields 4.5. You're going to take the 4.5, or you're going to tell to the guy, "Hey, I'm willing to pay to buy your bond, but I'm not going to pay $100,000 for it. I'm going to pay $80,000 for it, or whatever it equates for you to. It makes sense for you to buy it." In other words, people that own bonds today are pretty much screwed in terms of if the Fed keeps raising rates. Now, this can be offset. How can this be offset? If stocks are no longer attractive and people pursue the higher yields of bonds, they'll be able to pay more for bonds. So there's a way for the bonds to keep being priced higher, because you know what? I want $100,000 for my bond. What's your other options? Do you want to buy a stock? You don't, because it's in a bear market. So bonds are a great alternative to stocks in a bear market. If your coupon payments are eroding because inflation is 4 to 5%, in terms of 10 years from now, you are actually loaning money to the United States government and earning nothing on it. So in a rising interest rate environment with inflation going up, bonds are a toxic investment class. And I think that there's ways to offset this. And for people that are approaching retirement, sell your bonds. Just sell them. You need to move into high yield investment classes. There are far better opportunities, and I wrote about this in the report /bonds, REITs and MLPs are much better in times like the times we're getting into, Michael. REITs are real estate investment trusts, and MLPs are massive limited partnerships that mostly invest in oil and natural gas pipelines. So they make money on the fact that oil is just moving through the pipe, not if the price is going up and down.
Wow. Yeah. Out of bottom. Yeah, it's going to be interesting to see how things play out in the next couple of years, man, because it's nothing pretty for those, especially the baby boomer generation, because they are, older and not well educated on monetary and financial matters. So they are the ones that will be hit the hardest. And I think our generation, the younger generation, have a chance to learn from what is going on now and hopefully position ourselves to be able to, live a little more comfortable as we get older. So, but Lior Gantz, thank you for joining us for another RTD Live Talk. It's been great as always. I've learned a wealth of things. I have about 1, 2, 3, 4, 5, about 5 different / links that definitely drop below this for those that want to find out more to what you have going on, what opportunities you're educating people on. So thank you for that wealth of knowledge. Any last comments you want to leave us with before we sign off for this live session?
Michael, I just want to make sure that my big message to people is that investments are secondary in life. It's a rare breed of people that are able to become wealthier just by investing. Your main career should be your main focus. If you don't have the passion, the ability, or the skills to invest and pick stocks, buy the index fund and just forget about investing altogether. You'll compound your money at 7.6% a year historically, and that's going to double your money every 8 years, and you'll be fine. Forget about investing because it's going to be time consuming for you, and you're not going to be able to beat the index. Very few people beat the index. If you want to beat the index, either follow a great service that knows what it's doing, or make sure that you spend time learning, studying, understanding that this is a profession. Investing is a profession and an art. So that's kind of what I want to make sure that people understand, that their careers should be their top priority. That's where they can really make an impact and build a financial fortress around their family that no government will be able to take away from them.
Right. Well, that's true, man. I appreciate those thoughts. And so other than that, everyone, I appreciate you guys for tuning in for this RTD Live Talk session. Definitely, it's always a pleasure to have Lior join us. I'm sure we'll probably have you on later on down the line as time goes on to see what's happening with the markets and whatnot, and where your thoughts are and what you're strategizing behind the scene with opportunities to earn some extra income and whatnot. So thank you for joining us, Lior. God bless you for the rest of this year, and continue to work hard and do what you do, my friend. Thank you.
Thank you.
Everyone have a good night. See you guys later.